what your car payment is actually costing you over 10 years. Look, I'm going to show you something that might genuinely upset you. That $500 car payment you're making every month, it's not actually costing you $500. It's costing you way more than that. And I'm not just talking about interest rates. By the end of this video, you're going to see the real number, and it's probably going to change how you think about your next car purchase. Let's break down what that monthly payment is actually stealing from your future. So here's the scenario. You buy a $35,000 car with a typical 6-year loan at 7% interest. Your monthly payment comes out to about $595. Now, most people think, okay, over 6 years, I'm paying about $43,000 total for this car when you include interest. That's not great, but it's manageable. But here's what almost nobody calculates. What happens in years 7, 8, 9, and 10? Most people don't keep their cars for just 6 years and then stop buying cars. They finish paying off one car and immediately roll into another payment. It's a cycle that never ends. And this is where the real cost hides, because it's not just about what you're paying. It's about what you're not doing with that money. Let me show you the math that car dealerships pray you never see. Let's say instead of that $595 car payment, you bought a reliable used car for $12,000 cash. Now you take that $595 every single month and invest it into a basic index fund averaging 10% annual returns, which is pretty standard for the stock market historically. After 10 years, you know how much you'd have? Over $122,000. That's not a typo, $122,000. But wait, it gets worse, or better depending on how you look at it. If you keep doing this for 20 years instead of 10, that same $595 monthly investment grows to over $450,000. And if you did it for 30 years, we're talking about $1.3 million. Now, I know what you're thinking, but I need a reliable car. I can't just drive a beater forever. And you're right, so let's be realistic. Let's say every 5 years you spend $15,000 to upgrade to a better used car, paying cash. You're still investing $595 minus about $250 a month you're setting aside for your next car. That's still $345 going into investments. Even with this more conservative approach, after 30 years, you're looking at over $750,000. That's the difference between retiring at 65 and retiring at 55. That's the difference between financial stress and financial freedom. So why don't more people see this? 3 reasons. First, car payments feel normal. Everyone has one, right? It's just part of life. Except it doesn't have to be. Your grandparents probably didn't have a permanent car payment. This is a relatively new trap. Second, the pain is spread out. $595 a month, it doesn't feel as painful as writing a check for $43,000 up front. But that's exactly how they get you. Death by 1,000 cuts. And third, we justify it with safety and reliability. New cars are safer, they don't break down. And sure, there's some truth to that, but a 3-year-old certified used car is also safe and reliable, and it costs 30 to 40% less because someone else ate that massive depreciation hit. But we're still not done, because there are hidden costs nobody talks about. That newer, more expensive car, higher insurance premiums. We're talking an extra $50 to $100 a month easily. Higher registration fees, higher property taxes in some states. And if you're leasing or financing, you're required to carry full coverage insurance the entire time. Then there's the lifestyle inflation. You've got this nice car, so now you're more likely to spend money on premium gas, fancy car washes, and maintaining that new car image. It creeps into everything. Add it all up, and that $595 payment is really costing you closer to $700 to $750 a month when you factor in all the extra costs that come with it. So what's the move? I'm not saying you need to drive a 1987 Corolla with duct tape holding the bumper on. Here's the strategy. Buy cars that are 3 to 5 years old with cash, or save up for them. Let someone else take the depreciation hit. A $35,000 car becomes a $22,000 car in 3 years. Same car, same features, way less money. Drive it for 7 to 10 years. Take what would have been your car payment and invest it automatically every single month. When it's time for your next car, you'll have the cash, plus you've been building wealth the entire time. This is how wealthy people actually think about cars. They're not impressed by new car smell. They're impressed by net worth statements. That $500 car payment isn't just $500. Over 10 years, it's costing you over $120,000 in opportunity cost. Over a lifetime, we're talking about $1 million or more. The question is, would you rather drive a newer car today or retire 10 years earlier? Because that's the real trade-off. If this changed how you think about your next car purchase, hit that subscribe button. And let me know in the comments, do you have a car payment right now, and are you rethinking it?